Is Coca-Cola stock, ticker symbol KO, a good long-term investment? In this video, we will answer this question because on the last trading day, as the stock hit a new high, we found an unusual options trade that expires more than a year out, known as leap options. And so in this video, we will analyze this unusual option activity to find out how this wealthy investor is investing in Coca-Cola stock options so that we can decide whether to buy or sell Coca-Cola stock. Because as we all know, the rich have more access to information because they have a lot more resources to conduct extensive financial research on stocks to make better investing decisions. And so without further ado, let's dive into the data as usual. As we can see here on the option time and sales tape, 7,500 contracts that were being traded at the same time at 11:04 at the 22-second mark. And we can see these are for the June 20 options at the 70 strike calls and the January 16 2026 options at the 75 strike calls. And so when we take a deeper look at these trades, we can see here for the August 26th day, when these trades were being done, for the June 20 options, we can see at the 70 strike calls, there was 22,000 open interest, greater than the 7,500 that were being traded. And based on our analysis, these were most likely closing trades where they were taking profits and rolling to a higher strike price and a further date out to the January 16 options in the year 2026, which is 508 days away. And we can see at these 75 strike calls, there was only 5,655 open interest. And so this is less than the 7,500 that were being traded. And so we know these were opening trades because it's not possible to close out of 7,500 contracts if there was only 5,655 contracts that were opened previously. And so when we calculate the trade cost, now that we know that these options were the closing trades and these were the opening trades, of $3.84 is the price they paid. We multiply by 100 to get option prices, since one option represents 100 shares of stock, and we get $384 per call option. And since there was a total of 7,500 contracts, we multiply that out and we get a total trade cost of $2.8 million. And based on our analysis, these call options for the January 16, 2026 options, at the 75 strike calls, you can see our position is also here. POS stands for position, and green means buy, where they were buying these call options for $3.84 as we had just calculated. And so when we analyze this trade on the risk profile profit loss graph, where the x-axis is the share price of Coca-Cola stock and the y-axis is the profit note, the zero break-even line, if it is below it, it is a loss. And so you can see as the share price goes down, it becomes more negative, and so this is more loss. And if it goes up, it becomes more positive because it becomes more profitable, because this is a long bullish trade where they are buying Coca-Cola stock, and that is why we did too. And we can confirm this with a positive delta, which means it is bullish. If it was bearish, it would be a negative delta. And so because these options expire in the year 2026, there's a lot of time for these options to be profitable. And that is why this is a long-term investment when we analyze options that expire more than a year out. But keep in mind, not all of these unusual trades will be profitable. Even this one might be a loss. But as long as we diversify with higher quality stock picks based on this type of data analysis, we can become more profitable in the long term. So if you want more stocks wealthy investors are investing in for your portfolio diversification, then go to our website. We'll put a link at the top here. Let us know in the comments below, do you think Coca-Cola stock is a good long-term investment or not? As usual, please smash the like button, subscribe if you haven't. Take care and have a wonderful day.